Joining us now is Truist Securities Lodging and Leisure Equity Research Managing Director Patrick Scholes. Patrick, good morning. Good to speak with you here this week as everyone is, really focused in on the travel sector. You're not necessarily, though, thinking that it's great times ahead for the cruise line specifically relative to where the stocks are. Is that right?
Yeah, that's right. We've certainly seen the reopening trade kind of bounce back here, but I continue to see some structural issues remaining, especially for a company like Carnival.
And what are those particular issues that you're seeing develop in terms of bookings and things like that?
Well, I would say there's two things. Number one, I heard a couple minutes ago Morgan talk about Omicron not being as bad as Delta. Well, it's actually been the opposite for the cruise lines, where Omicron, as far as its impact on bookings, has actually been far worse. So that's really has dampened the booking pace of late. And then number two, a real challenge, especially for a very mass market cruise line like Carnival, is the double vaccination requirement, where, 60% of the population isn't fully vaccinated? Well, that's going to negate a lot of family cruising, especially on a mass market ship like Carnival's brands.
So, Patrick, I mean, when I said that, I was referencing Expedia specifically. So it's good for you to put that context there where the cruising is concerned specifically. But the fact that you have a sell rating on Carnival, you have hold ratings on some of the other names as well. What is it going to take for you to get bullish again on this industry?
Well, right now, Morgan, after we've sort of seen this reopening bounce, there's two bull cases right now for the cruise lines. One, that the back half of the year will be back to normal. I definitely have looking on my proprietary research, I definitely have my doubts that third quarter will be back to normal. It's possible, but I would say it's not looking very favorable. And then also, there was some very positive commentary over the past week from a number of the cruise lines reporting earnings, talking about very strong bookings for next year. That also helped lift the stocks. Well, that is absolutely true. I don't think it's really a fair apples to apples comparison when we talk about next year. Because next year, if you're booking at this point, it's really the high end and exotic cruises, which are, in fact, doing very well. But that's only a small portion of the business. What we're still seeing struggling is the Caribbean. So I worry that the pricing cuts this year for the Caribbean will bleed over into next year and continue to make it difficult for pricing power. I mean, time will tell, but I definitely don't think it's a clear sailing here. Sorry about that pun there.